It's Accountech Bytes, your pint-sized perusal of the news in accounting technology this week with me, Tom Herbert, recording in what I'll euphemistically call the school summer holiday location, upstairs. Thanks for tuning in, and if you're watching on the socials, then please remember to like, subscribe, or follow. Let's kick off with some software CEO news, and we've had not one, not three, but two new appointments in the world of accounting software. First up, and IRIS has appointed Jason Dees as its new Chief Executive Officer. So Dees succeeds Gus Malazis, who goes back to his role as IRIS chair. I'm guessing top of his in tray will be continuing the company's growth, particularly in that target market of North America. And a couple of days later, TaxCalc announced that Paul Evans will be joining as its new CEO. So TaxCalc have been without a big chief since its private equity takeover. Evans has previously worked in senior roles at Sage and also founded Just Accounts, which is now Accountech. Let's get straight into MTD Corner now. And tucked away in the government's HMRC digital transformation roadmap was news that making tax digital for corporation tax will not be going ahead. Instead, HMRC has said it is developing an approach to the future administration of corporation tax that is suited to the varying needs of the diverse corporation tax population. It's not a huge surprise to MTD followers, as we haven't heard much about it recently. It'll be interesting to see if MTD for partnerships will go the same way. Now I mentioned the government's digital transformation roadmap for HMRC. I read all 14,000 words of it to produce this article, so I'd be grateful if you could read it. The roadmap lays out more than 50 measures which HMRC claims will transform the UK's tax and customs system. It sets itself a punchy target of handling 90% of customer interactions digitally. Some headline news, a new PAYE service for about 35 million UK taxpayers, a move from Government Gateway to One Login, expanding voice biometrics pilot on the helplines, digitalising IHT, and a new digital disclosure service. Now, from a tax agent point of view, perhaps the most startling admission in the document was that due to the limited capacity of its IT systems, as HMRC develops its digital services, it's been unable to deliver good quality services for agents and intermediaries. Now, if you are an agent or an intermediary, you'll probably know this already. Taxpayer can see more information than you can. But the omission is a start, and HMRC has said it's going to work with professional bodies to identify where these digital services aren't good enough for advisors. They put forward a number of proposals to help close that gap, including enabling agents to digitally withdraw their clients from self-assessment rather than having to call or write, and the ability for agents to track progress of client submissions and repayments. Let's move on to MTD's income tax iteration. And draft legislation released earlier this week confirmed several policy announcements, including the reduction of that threshold to 20,000 by April 2028. In this article on ICAW Insights, the Institute raises concerns that this will impact a substantial number of property landlords, including many with just a single let property, flags the compliance burden and cost of software that the regime will bring, and reiterates his opposition to the quarterly filing element of the programme. However, it does say that despite these recommendations, quarterly reporting will be introduced. I think this legislation probably is the final nail in that particular coffin. And heading to Westminster earlier this week were members of the MTD therapy group, including Robin Milstead, who posts here about their meeting with Exchequer Secretary to the Treasury and HMRC Chair James Murray. Robin's post about the meetup contains perhaps a quote of the year already, saying that although a lot of the MTD products are intuitive and well designed, giving them to clients is like giving a Rolls Royce to a fish. The group passed on its concerns and recommendations to make MTD a bit more workable, and apparently Mr. Murray graciously accepted the letter. Here he is. And Robin will also be among 3 accountants joining the MTD Accountability Club webinar on the 18th of August, where accountants will discuss the challenges and opportunities they found getting ready for the first round of MTD mandation. You can reserve your spot here. And finally, on the MTD Beats, we have a new piece of software on HMRC's Making Tax Digital software page. Welcome Accounting Software Suite Nomi, formerly known as Numisma. Let's get on some new stuff now. An expense management and automation platform, Web Expenses, is introducing expense cards. So rather than having to go through third-party workarounds, Web Expenses users can have either a physical or virtual card on their phone's wallet that will allow employees to take care of their expenses. It looks like it's free for all Web Expenses users. The FAQ hints at charges for additional physical cards, but you may want to check the T's and C's on that. Practice management platform Carbon has introduced an accounting client portal which firms can customize with their own branding. Another release from Dext, this time approval audit trail when publishing to Xero. So you can publish the entire approval history into the notes and history section of a Xero document, like so. And we have another tool in the multi-entity consolidation and month-end close market, Gather.nexus. So the platform allows Xero users and eventually QuickBooks users to take multiple instances of these cloud accounting packages and consolidate them in one place. So I spoke to former tech CFO and founder Howard Thompson, who explained how the platform worked. It's definitely a trend I'm seeing. So we've had the likes of Finstack, Mayday, and Translucent emerge in the market where businesses are looking to extend the life of their small business cloud accounting systems rather than migrate to those larger ERP solutions. Speaking of Mayday, they've just introduced deferred revenue and prepayments, so you can identify relevant transactions, apply recommended schedules, and one-click post your journals. Let's head over to Xero now, and the Kiwi Cloud Pusher has revamped its product ideas page. So if you have an idea that will improve the platform, these ideas now fall into one of these categories. You submit the idea and the community reviews it. Accepted ideas move on to the product team who may build them into the platform. Last year alone, apparently, Xero released features that met the needs of 360 ideas instigated by the community. Now, I seem to remember last time they did a refresh like this, a lot of the old ideas got wiped. Hopefully that's not the case this time. Speaking of Xero, and they're introducing SMS invoicing in the UK to speed up payments, like so. Now, regular viewers will remember that Cashflow and Staffology founder Dwayne Jackson had returned for a third bite at the accounting software Cherry, this time with CIS Manager, a product targeting contractors and subcontractors working under the CIS scheme. Well, CIS Manager has just released a new dashboard designed specifically for accountants that brings all their contractor clients into one place. Speaking of CIS, AI bookkeeping tool Briefcase now supports CIS invoices. So Briefcase and its AI can automatically split labor versus material lines, assign correct VAT rates to each line, and post each line in the right category. An update from Bright on its Bright Manager product, and they've added enhanced WIP allocation. So WIP entries can be reallocated to a different invoice if needed, or they can be unallocated entirely depending on the needs of the product. Let's check in on the IRIS Elements Help Center, and in their anti-money laundering section we have risk assessment notifications. So these are in-product notifications to let you know when a risk assessment has been submitted for review. A quick roundup from Integrations Addict's Free Agent, who flagged partnerships with the likes of AI bookkeeping tool Genesis, financial modeling tool Powder, and an integration with automation platform via Socket, who are different from Socket, who are a proposals and onboarding tool. Finally, watch your head. Let's head into AI Inglenook. Ring that gong. And first up, QuickBooks parent company Intuit has launched its new agentic AI into its mid-tier suite, Intuit Enterprise. So released a little while ago, Enterprise is that upper tier for those larger businesses. And Intuit is sprinkling a bit of technology fairy dust over this product. So you've got agentic AI in the areas of finance, accounting, project management, and payments. And a big thanks to Continual CEO Oliver Crofton for lending us his expertise and explaining what the EU's forthcoming AI Act will mean for accountancy firms selling into that market. Had a few comments saying, this doesn't relate to me. Good for you, champ. And finally, great piece here on Raconteur, flagging new evidence that suggests that auditors using AI systems can't fully control or explain them. So, according to a recent review by the Financial Reporting Council, none of the 6 biggest accountancy firms have any formal process to monitor or quantify the impact of AI on audit quality, despite widely adopting the tech. Scary stuff. And that's your lot for today. Thank you very much for tuning in. As always, please remember to like, subscribe, or follow. I'll be back with another video next week. Bye for now.